A lot of things have happened in the economy over the past few weeks and months in terms of the fact that we've got an IMF staff program or agreement between the staff level and government. The Monetary Policy Committee has been reviewed as well, and also inflation appeared to have slowed down slightly and development in the economy. But how does all these things impact on the banking sector, especially when it comes to the cost of credit? It's believed that the banking sector is the pulse of the economy. That is why at any time when we have an opportunity to engage a critical individual in the industry, PM Express would always come to him. He's the Chief Executive of the Ghana Association of Banks, Mr. Johnny. We'll also look at development in the banking sector on PM Express Business Edition. Thank you so much, Mr. It's been a while. I know you're catching up on a lot of things, right?
Yeah, it's been a while, and thank you very much for having me on your program.
A lot of things have happened in this economy. I mean, one could talk about first the IMF program. There's now even the back and forth argument about the recovery of the economy and all the rest. How are all these development recently has to do with the rating agencies reviewing our ratings, even though it was still in a category that some would say is still not that good, but also it signals some investor confidence. How has all these developments impacted on the banking sector when it comes to cost of credit?
Thank you very much. You know, the sector is one that takes in several variables into our consideration, particularly when it comes to how these fundamentals impact the cost of lending. If you review the central bank's MPC report, the one that was recently released, it was clearly stated in the report that cost of lending is coming down. Is it coming down as aggressive as one would expect? I wouldn't say so, because the variables that should also aggressively be pushing down are coming in the right direction or trending in the right direction, but not as aggressive as one would say. So, there are various factors such as the recovery, of the economy, recent upgrade in the sovereign rating, which I believe has factored in some of the good reports that we have received on the country around GDP numbers. I believe the Q2 was around 6.9%, which was significantly ahead of expectation. The budget deficit numbers are within target, and so foreign reserves, significantly above the three months import cover target that as a country that we've always been benchmarking at. So all these factors, I'm sure, may have gone into the evaluation that was done by the rating agency, coupled with the fact that the government has also finalized more or less the debt program.
I think that let me try and break these issues down and just to get the scope well. Let's first start with the monetary policy review. Have your members responded to this by the necessary review? It might not necessarily be a reduction, but have your members responded to the reduction in Bank of Ghana's lending rate to the commercial banks?
Of course. I mean, it's an automatic transition or transmission.
Automatic is different from whether they have responded.
No, the thing is, there is a Ghana reference rate, and the policy rate, which is now 27%, is a major component of the Ghana reference rate. Since the announcement, that was just about a week or two ago, the new reference rate will come out, and obviously it would factor in all the variables that were announced.
So do I get from you that they are yet to respond to, because the other variables that make up the Ghana reference rate haven't fallen in line yet? And so your members have not responded yet, but very soon they'll respond.
I don't know what kind of response you are looking at.
The response in adjusting if a critical component of the Ghana reference rate has gone down, even if it's by 0.0, it means a lot to people.
The same MPC report that announced a reduction in the policy rate recognized the fact that the lending rate has been trending downwards. And it's a reflection of what we are seeing in the economy, particularly around the matters or the issues that I talked about earlier on. But the point about the reduction in the policy rate transmitting into lending rate, I'm saying that transmission is automatic, because there is a hardcore formula that is used to determine the Ghana reference rate. And the policy rate is a significant component of that. So definitely, it's not a bank that should decide whether it will affect our lending rate or not. It must affect the lending rate because the transmission is automatic.
And the market and the players are responding to that.
Of course, yes. Of course, yes.
Because the argument is that when it has to do a reduction, it takes a little bit while because they have to unwind and all the rest, and there's a second round effect. You want to take your time,
you see,
as compared to when even the reference rate goes up by a percentage or 100 basis points. Quickly the banks will be responding and sending emails to all those things.
If you trend the performance or the conduct of banks over the years, you know, there are things that have more or less, I would say, they are people's conjectures. The people just think that is how the banks have been responding, but it's never the case. I'm not sure there is some grand scheme that says when the rate is going up, let's quickly adjust. When the rate is coming down, let us slow down in adjusting. It's automatic. Every first Wednesday of the ensuing month, a new Ghana reference rate is published
and
by
the
the
banks
association.
do respond to that.
Of course, but you see, here, let me clarify. If you sign on to a bank for a loan product and you sign a fixed rate loan, even if Ghana reference rate or policy rate comes down to 0, and you have signed a fixed rate loan, you are definitely going to be receiving that lending rate as your
when
benchmark
it's variable,
rate.
then that's
if it is variable and is benchmarked to the reference rate, which most of the loans that we sanction in this country are, then of course you benefit from whether it's an upward movement or it's a downward movement. But mind you, in that same report, on the same MPC report, the non-performing loan ratio increased from 20-point-something% to 24.3%.
I'll come to that.
It's very important because you cannot disassociate lending rates from the risk factors that banks are confronted with when it comes to determining, you know, the cost of funds or cost of, you know, the money that we give out as borrowings.
I read a recent World Bank report that talked about the outlook being very good, rates going to, inflation going to drop to as low as 11.5%. And that's even a projection that it could even go down further. I read through the rating agency's report, and the outlook is quite favorable. Looking at these indicators, and maybe talking to me as a George Wiafe and Mr. Wua, having your industry experience, if I'm to go for a personal loan right now from maybe bank XYZ, would you advise me to do a favorable rate or a variable rate or a fixed rate?
I mean, you know, I wouldn't want to be
capacity as
serving. No, I'll not be serving as an advisory, kind of expert. But I mean, I would say, if depending on the horizon, I mean, what all the experts from Bank of Ghana, from the World Bank, from IMF, they've all said positive. Even Moody's in their rating report said there's a positive outlook. If there's a positive outlook, it means that fundamentals are going to move in the right direction. And if you want to ride along with that kind of trajectory, then of course variable rate loans are what I would advise. But again, it is not something that's coming from the association. It's something between the two of us, because I cannot be providing an advisory service on this interview.
Do you see rate trending down? Because be it 27 or be it 20, some would say that is quite high. And you've been on record saying that we've been there before, the single digit. Do you see rates going down with all these variables and externalities showing the positive direction that we are going to get there in terms of cost of credit getting into that single digit band?
Yes, I mean, I'm very positive about rate movements. And the fact that a lot of the determining factors, you know, the transmission of those factors are automated, which means that as rates are coming down, it is not for Bank A or Bank B to decide whether to also move in line, but the baseline, which is your reference point or your benchmark rate, which is the Ghana reference rate, would have been fed with that movement, and which means that even if your margin on the facility is at a certain rate, the baseline comes down, and then you are supposed to, or the rate will definitely automatically come down. But as I said again, let us not be fixated only on these inflation and the like.
But they are critical.
They are very critical.
Very important.
They are very critical. But To me, even more critical is the the credit environment and also the culture, credit culture in this country. If as a bank, each time you lend money, you are likely going to lose 24% of it, then that should be, it should feed also into how much you charge for the next loan. So we need as a country to also turn our minds to the kind of culture we are building up, how we respond to our obligations. The last time I used you as an example, there are more friends that perhaps are not talking to you anymore because they've taken 100 Ghana or 1,000 Ghana or 2,000 Ghana from you and are refusing to pay. And you are now the bad person. It's the same way when it comes to the banks. So let us not be looking at the rates and the non-performing or the credit culture in isolation. The two together determine how much the customer or the next customer pays for the loan.
You say, what would you tell those who would say, or some would want to ask that, what are the commercial banks not doing right in terms of the non-performing loans going up? Because some will say that we can continue to blame it on the externalities, the court, and then the behavioral attitudinal challenge here. We know the scrutiny that loans go through, the escrow, and all those things, covers insurance, and a lot of things go into assessing a loan and all the rest. The rate of increase is shooting up. Can we still continue to blame it on the externalities, the economy, the behavioral thing, the court system not being that helping and all the rest? What are the commercial banks not doing right to ensure that we reduce? I mean, every institution may be exposed to NPLs and every economy, and not just Ghana. But there's a rate of increase that is a huge challenge for a lot of people.
Yeah, you see, I always come back to the fact that banks are doing everything within their risk parameters to get the best facilities on their books. We do not go out there, be fighting each other and say, no, I'll give you this, I'll give you that, or instead of taking that, I'll rather take a lesser something so that the loan becomes maybe...
It's a high target that these banks have credit escrow committee, credit officers have been given very high target, and that is why often they might overlook some of these requirements to lend these things to people out there.
You can give whatever target as a bank. There are independent structures within the bank that serve as moderators of whatever target that you give. Okay, as a business, the origination point, they may say, oh, we want to sanction 50 million or 500 million Ghana cedi loan in Q4. But they originate, but they don't approve. The approving person also has a target of whatever loan that you approve, we are looking at a default rate of not more than maybe 5%. So they also open their eyes and say, okay, you have brought 500 million, but those that meet our risk acceptance criteria is just about 200 million or 150 million. And those are the ones that will go to either the board or the credit committee. So these independent checks and balances within the banking infrastructure serves as counter to whatever performance pressures that you refer to. But the point is this, we cannot take away the fact that banks have their backs against the wall when it comes to recovery. You see, signal is everything. If you know that if you take a loan from the banking industry and you don't pay, and you have put your house, as collateral for that facility, and the bank goes to the court, and within a matter of 2 weeks to 1 month, the court makes a determination and says, go sell. The next person that is putting their house on the line to take a facility knows that I have to pay back this loan. Otherwise, the court system is not my defender. Or they will fairly represent what the situation is. What we have now is a situation where when we go to into recovery, it takes as long as 2 years, some 3 years, some 4 years. And even after you've received judgment, execution alone, blocks are put, impediments are all in the name of the law. And these laws are supposed to protect the next borrower. If the bank is not able to recover from the bad assets, how is the bank going to be capacitized to lend to the next person? So when we are talking about credit to the private sector, we should look at the same private sector are the ones that are hurting the banks. We need a structure that makes it very punitive for you for default. We recognize the fact that some defaults are not like intentional. Economic cycles can cause a default, the disappearance of a market. So many other factors can cause a default. But we are talking about default that mostly are, as a result of just unwillingness to meet credit covenants. These people are living large. They've changed banks. They are now banking somewhere. They are doing things. Meanwhile, they have significant exposures, killing another institution. So we cannot take away the fact that whatever the bank undertake or they do, we need the credit culture to be right. I use this example every time. We always like to compare ourselves to other countries, but when it comes to credit, more or less credit performance or culture, improved credit culture, we don't compare ourselves to like a place like the US and the UK and the rest where we say, oh, you go to a bank and you get a facility. In the US, if you even rent a house and you don't pay or you default in your rent payment, the banking system is close to you. You do not have access.
Should we do that here? Should we do that
of
here?
Of course, yes.
Blackout people.
We need to begin.
It's established that they are habitual quote defaulters.
We need,
and again, I won't mention the bank's name. A typical example of a bank that went down in the past. When you look at their top 10 people who are indebted, they're not the George Wiafe or the Kabna Mensah and Abosokai. These are well-established businessmen that we can point their names out. Should we get to that stage where these people are blacklisted from the system? Of
course, yes. I'm 100% behind that. The law is no respecter of persons. If you have defaulted, you took a facility from a bank, there are shareholders who are expecting a return. And if you took a facility and you are defaulting, you are not paying, and there are covenants in place that you have breached, the bank reserves the right to go after you, whoever you are.
It should not be happening.
It appears that as it is now. The example,
it wasn't just one bank.
The example I used, George, the example
there
I
are about
used,
3 or 4 banks that went down. The individual's name ran through.
The point is, the example I used is an example that I want us to focus our attention on.
We should have associations whether association blacklist that.
No, there's work. There is work already underway with Bank of Ghana.
Blacklist some of these people.
Blacklist is already, in fact, it's
because
already
if the
in
Bank
place.
of Ghana is not, if the government is not doing, the situation is very powerful.
It's already in place. There is a credit reference bureau in this country where banks send a credit reference on defaulting customers, and the banks are by directives from the central bank expected to always check.
Are they enforcing?
They do it. They do it. I can say
we won't see
without any equivocation.
Or if you go through an institution that is facing a high NPL exposure and you do an audit, it won't come out that there is a Jones Mensah that we know in the system that is running through, and even an instance where in the past the banks, this person has a high exposure and they kept lending to that person.
I mean, you won't say it because the banks are expected to check from the credit reference bureau on the status of the borrower, the person that you are before you lend to the customer. You are supposed to check whether this customer is already indebted to another bank, and if they are, whether they are performing on that loan. The point I was making is that is only one reference check. If that customer has even the property where they are operating their business from, they are defaulting on their rent payment, the bank has no visibility on this. If they have suppliers credit and they have defaulted, the bank has no visibility on it. But what happens is, because the customer has not disclosed all these other credit exposures that are outside of the referencing system, your loan repayment may be used to pay a supplier. And then the default comes and hits you, the bank. We need a system that gives an opportunity for the banks to have a 360 view of a borrowing client, so that we know that George Wiafe has come to Bank A to borrow. George Wiafe has no default in the banking industry. We have checked. He has no rental default. He has no supplier credit that he's not meeting covenants. Even children's school fees, he's meeting them and he's not in default. All these things are credit risk points that banks are supposed to have access to. Do we? No. Because we are highly regulated, we are expected to report. But GREL, Ghana Real Estate Company Limited, or this, I don't know whether we have association of property owners who are also the landlords.
There is a real association.
Do we have a system where they also do these kind of checks? Even if somebody is coming to rent a house from you, you should have a system where you check on this person, whether this person coming to rent my property has defaulted on the property they were moving from. We don't. And these are structures that I'm happy to say, working with the Bank of Ghana, we are almost there. We are gradually coming to the level where, I mean, it's automatic. I mean, which bank, knowing that you are a routine defaulter, will continue lending money to you? No.
Mr. Wu, I mean, we knew the workings of the Credit Reference Bureau and what the progress or the systematic contribution that it has made to the system in trying to reduce this. Still, the NPLs are high. There could be other reasons accounting for this as well. We know the work the Bank of Ghana has done over the years to deal with the challenge. It is still high. Would you subscribe to those who will say that maybe the situation is getting to the time where the situation has to take a lead? Because when I'm clearing a check, I know what a bank A does to ensure that this is genuine. The same thing can be done. Even if the Credit Reference Bureau is a layer, another layer from the association itself, that going forward, Bank of Ghana, we need your blessings on this. These are the peer steps that we've taken to ensure that we reduce this high default rate.
Yes, I mean, of course, as an association, we've already taken that step. As I speak with you on the 26th of this month, we are organizing a training program for the judges, the commercial court judges, appeal court judges, and the high court, the other high court judges, on refreshing them on the credit requirements of the Lenders Act. It's a step that we are taking. We are funding that program as a banking industry. We are funding it to get our judges refreshed. Just like anybody else, continuous professional development is very important. And as I said, there's a committee that I sit on, working with the Bank of Ghana, with NPA, where even in the oil sector, we are trying to bring in all the other credit points that they have into the mainstream, so that when you are lending to an OMC, you have almost a full view, even if not 100%, you have maybe a 280-degree view of the, which improves significantly the credit performance. But let us not also lose sight of the fact that businesses have also failed because of the circumstances of the time. If currency depreciation for half year was about 24%, we've had interest rates over the roof. Default rate almost is bound to happen. If you borrow at 32%, the propensity of default is going to be high than if the lending rate was maybe around 18-20%. But you cannot blame the banks for where it is, because the interest rate or the lending rate, as we say every time, is not like a curtain that you just go and you pull it down or roll it up. It is, how do we say, it's a derivative of other factors. And that is why we are all interested in monitoring progress that as a country we are making on inflation, the exchange rate, and the other, the fiscal position. We are all interested and we are watching very closely, because all these have a way of affecting the common man on the street on the cost of borrowing or the cost of lending to our customers.
How is this again? And I knew that in the past, during the COVID times and the crisis and all the rest, there were concerns about the banks being very measured in terms of their loan book and then credit extension. I know that NPLs will always be a constant factor, a constant variable in doing all those assessments. With the outlook and with what you see in inflation coming down, are we going to see the banks review the assessment when it comes to credit extension going forward?
Again, I would say that at no point did banks close any credit
They
tabs.
didn't close. But when you look at the Bank of Ghana data, you see that lending to private sector has reduced significantly.
No, the same report. I don't know what report.
Not the value, but in terms of the growth in lending to private sector.
I don't know what report you are reading, but the report I read, the recent MPC report, said lending to the private sector rather increased by, I believe, 27% or thereabout. Lending to the credit private sector against about 19% the year before.
The drop.
Even the real, for the first time, for the first time in almost 2 to 3 years, the real growth in lending to the private sector is positive. It's been negative for quite some time now. But
from
the real
where
growth,
it was
yes,
to where it now.
If you discount the impact of inflation, the growth is still positive. It tells you that on a net basis, banks are lending, in spite of all the challenges that we are having as a country.
Are we going to see a growth now that the outlook is positive, and those variables that made some banks, and I use my word carefully, a little bit cautious, are improving in terms of your push on lending? What are things going to be like going forward?
You know, it's difficult to speak for how banks undertake
good
their
business,
risk
meet all the requirements, the risk assessment.
If you're a good business and you meet all the assessments, of course, even before now, even in periods when we were recording negative growth, banks were giving loans to those kind of business, bankable projects. So those factors are more or less an evolving issue, something that banks continuously will be reviewing. But risk is not stagnant or static. It's, as the environment changes, the risk factors within the environment also change. And as a lending institution, you have to be keeping close eye on the movement of all the variables that feed the decision-making process in sanctioning a facility. I can't sit here and say banks are going to be bullish, lending like anything, or to say banks are going to slow down. But of course, to say that just like the MPC report said, credit to private sector is showing positive trend. We are all hoping that that trend continues and reflects the positive movements in the economy. The economy is moving in the right direction. Of course, banks are the institutions that fuel economic growth. We oil the wheels of progress. So banks cannot sit aloof and say, oh, we are watching the economy to be growing when we are the ones that are supposed to be propelling the growth. So as we see now, from the report that the two of us and your viewers have read or may have read, we've seen some positive trends, and we are hopeful that those trends will continue on the trajectory
from
they
the
are on
industry perspective, the Bank of Ghana is of the view or believes that the regular publication of these annualized percentage rates could stimulate some competition. There are some also the school of thought that it is always a case-by-case situation. I mean, I don't care. There are banks who start stacking their rates that are very high and they know them. Do you share the view that putting out this data, regular putting it out, could one way or the other stimulate some competition to influence the cost of credit?
Of course, yes. Disclosure is always important, and making how the factors that drive your rate, making it public, or your annual percentage rate, making it public as is required by the central bank, should help the customer. It's not for the bank, actually. It's for the customer to check and say, oh, my
shop
bank
around,
yes, just like when you are going to buy your shirt.
When it comes to SME, Bank Z is better, so let me go to that bank to access credit for SMEs.
Of course, yes. Just like when you go to the shopping mall and you want to buy a shirt, you don't enter one shop and then you get a shirt and then you exit. You go to that shop and then you go to another shop and then you go to another shop and then you go to another shop. You compare quality, the price and everything, the speed, and then you make a decision. So that disclosure is supposed to facilitate that process where the customer becomes empowered and knows that, oh, my bank though is charging me a little percentage higher than the next bank, my bank can deliver the credit to me within a record time. So there's a whole lot of factors that go into customer decision making. But of course, that is a big pillar that should be made available to the customer. So the customer becomes well informed and can take informed financial decisions.
So we'll be coming back to look at, often we focus so much on the customer, even though it's very critical. How are all these developments also impacting the operations of the banks, being able to move out and get credit at a cheaper cost on lend, and even your international partners, the rating agencies, inflation coming down, in terms of all these things and how it impacts on the banking sector itself and the way you do business. This is PM Express Business Edition, engaging the Chief Executive of the Ghana Association of Banks to look at the recovery of the economy and how it's impacting on the banking sector and even the extension of credit to businesses and individuals. This is PM Express Business Edition. Welcome back to PM Express Business Edition as we look at the recovery of Ghana's economy and how that is impacting on the banking sector. We were in a challenging period. We heard about ratings were down, the economy was struggling, debt exchange program, the uncertainty. Again, to pick on all these issues one by one as well. How is the system now for the banks compared to 2 years ago, even when it comes to engaging your partners outside, the layers of guarantees they will be pushing for? Now let's first even look at the credit rating agency and the comments. It's often said that you cannot get a better sovereign than your government, but there have been instances where an entity had gotten a better sovereign than our government. How is this comments or report by these agencies impacting on your business as commercial banks?
Yeah, of course, they impact significantly on our ability to deliver value to our customers. Mind you, when the country's rating went all the way to the floor, a lot of banks lost correspondent bank lines. We got to the point where for some of the banks, to do international trade, you had to post cash, as backing for the trade activity that you are embarking on. So if as a country we are getting to the point where the rating begins picking up, the expectation is that as it gets to the level where the appetite of our offshore partners assess them as okay for their business, we should get to where we were maybe pre-2022 when we went into this debt crisis. You should know that the international banks, your big banks in the Western world, Citi, the HSBC, the GP and Co. If your rating is at a certain level, irrespective of what your performance is as a bank, they decide to pull out. They have internal policies that prevent them from dealing with maybe an institution that is operating in a sovereign that has a certain kind of rating. So if your rating improves, the expectation is that it should build up trust and confidence. And these same banks, of course, they are in business for business. And our business is important to them as well. And to the extent that their internal policies will allow them to now begin dealing with these banks that hitherto they froze. In most of the instances, the lines were not cancelled, but they were suspended or frozen. They should be maybe unfrozen so that business can go on at least cost. Because as banks are posting cash before undertaking transaction, who pays for the cost of holding that cash? Is the person for whom the bank is undertaking the transaction. And therefore, it makes the cost of it all contribute to the cost of banking or cost of credit that we discussed in your earlier version.
And let's look at also the IMF staff agreement as well. And when you read through the IMF report, these are independent reports and not a report that government has put something. And the signal again it gives about the environment as well isn't also now making your business, I would say, a little bit easier to do these international transactions and even getting certain deals, and even other businesses out there or multinationals now engaging in that. We want to do a certain JV. Can you come on to syndicate and all the rest as well?
Yeah, I mean, they are good and very positive, but outlooks are outlooks. A lot can happen to an outlook. So what we record on the ground gives more credence on what we are capable of doing. And that is why what we are doing now is more important. So we have a positive outlook, but it remains an outlook, and it will inform decision makers, on what the position potentially could be in the near future. But if they have to take a decision now, the now is important for them as well. Your ability to deliver now is critical. So we cannot take our foot off the pedal. If we are doing something good, we need to continue on that trajectory, ensure that we drive value so that the outlook even look brighter and brighter. Because we have outlook, positive outlook, and sometimes enhanced positive outlook, which gives a lot more weight to the rating agency's assessment and potentially further elevation of the sovereign ratings. The business community out there, they are like bloodhounds. If it's good, they will flow in without without any
information. They don't need a report to guide their investment.
So these are very important. Those are But they have their own review.
Surveillance on the ground.
Yeah, they have their own surveillance on the ground. There are some of these people that when you engage, the things they'll tell you about your country.
Ghanaian economy.
There are sometimes you have no clue.
Get shocked.
That you get shocked about the kind of information that they have. So these are good developments, and we hope and trust that we continue on this trajectory. But we cannot relax, thinking that maybe some positive things are happening and therefore everything is okay. It's not okay yet. We need to work at it. There's a lot more work that needs to be done to bring lending rates significantly down.
To single digit.
Wherever, because we have done that in this country before, where banks were writing letters. And I say this every time because I saw it. I did not hear it. Where we were writing letters to customers. Of those
credit committees that
we were writing letters to customers to come for loans at certain rates, below 15. We were writing letters in this country. So it is not a dream. It is something that has happened in this country before, and it's capable. We are capable of repeating what we've done before, and even better.
The last time I spoke to you, there were some uncertainty again about the debt exchange program, even the domestic, whether there will be another round or not. Now the Eurobond as well as also closed as well. What does this mean to you again? Because I know some of the banks were heavily into this as well. In terms of, has the uncertainty been closed now that you are clear that at least for the next 1 year, you are sure that the bit about this debt, there wouldn't be another debt restructuring or another rule will come that, oh, we asked for 10% now, let's do 20%. What does this mean to you in terms of the closure on this Eurobond debt exchange program and then even the domestic debt exchange program?
What I would say is I don't think there is any appetite for any kind of debt operations in Ghana or even beyond.
It's not about appetite. When GOG decides that the
fund
program, we have to do that. It won't be about whether you have the appetite or you don't have the appetite.
The GOG cannot say you have to do it. You have to subscribe.
You can decide not to sign, but it comes with the consequence for not signing.
And the point is, let us not go into something that we have already closed.
Okay.
But the point is, the appetite for anything semblance of that is zero, below zero. And therefore, as a country, we should work on the upside. What can we get from the savings we are making from the exchange program that we have already executed? And that is why the fiscal position is critical. And we look at the fiscal numbers, we look at the deficit performance, and that's why we are, I would say, excited, but we are happy that for the last reporting cycle, we saw that the budget deficit is within the target. I think it was, is it 4.2 or thereabouts, within the, or 3.4 within the target of about 4.2 or something like that. Whatever it is, we were within the target, because that is what signals whether we are going to be debt. Yeah, we are on track, and our debt, our ability to service our debt is going to be affected in the near future. It's important that the fiscal discipline that we have or we are pursuing, or from the IMF report that we are pursuing, we continue on that trajectory. We don't have the report from July to date yet. We are just hopeful that there are no slippages, and we operate within the confines that we have set for ourselves and also for the program. Because that is what gives credibility to us as a country on our ability to perform on covenants we sign, for which we have taken facilities from these international bodies. And when we do that, confidence in the market then improves. Trust, becomes, good, or people have a lot more trust in our financial system, and that should translate into better terms for the country if we want to engage elsewhere for capital or for any form of funding, then that should read or transmit positively into whatever considerations that go into determining the rate.
It might not be scientific, but how fair, as you talk about the recovery and all the rest, can we look at deposit mobilization as a critical ingredient that shows that liquidity has picked up, or there's a lot of economic activities and people are bringing their monies to the banks, or maybe your own hardware? Because there's been some pickup, and I don't have the up-to-date number, but deposit has picked up. And and again, I use my words carefully, if things were that bad, and I stand to be educated on the numbers, we wouldn't have seen deposit picking up. How critical, or that variable in terms of using it as a measure of the recovery and how that is impacting on the banks in terms of deposit mobilization?
Yeah, it's important. Deposit is the liver of the banking industry. Yeah. You know, it's extremely important. So the trend of growth or trajectory of growth is critical. But beyond that, in the central bank report, you find that the composite of economic activity also improved. For the last time it was actually a decline, but I believe it was 1.6, which is a good improvement, a good movement on the previous same time last year, which means that confidence, consumer spending and the like have all kind of picked up. So the movement of deposit growth is a good sign of confidence within the banking industry and trust within our ranks as well. We are a public interest industry. So to the extent that people feel secure in putting or leaving their money with the banks, and that makes us record that kind of growth, also goes to attest to the confidence that they have in our ability to securely keep their funds. But it can also be a measure of what do we do with this? We are not sure about what is happening in the economy. Maybe we are safe in just leaving the money there for now, as we think about what to do next, because we have 1 million, but we need 3 million. But the additional 2 million that we need, we cannot afford the loan. So why don't we invest the 1 million maybe in some time deposit for 3 months or 6 months, whilst we look at what the variables are showing us that there is a positive outlook. So at the point when maybe we can borrow at a certain rate that we can afford, we then go for our 1 million. Then we have our 3 million for our business. So you can look at it in two ways. But we see the positives from the deposit growth. I think
a little report I chanced on, even though it's an internal stuff, gave me, and again I stand to be educated and corrected, gave me an indication of a strong pickup even in deposits just in recent times. And some are linking that again to uncertainty on elections, and even how that is going to dovetail into the purchase of FX and all those things. Has it come up in the industry? Is a concern for the banks that deposits are picking up and that people are then doubling up their CD deposit to buy FX or something?
No, that is not. I'm not sure. That is not what
has deposit picked up over the last 3 months? Has there been a significant growth in
I don't have the data to support that assertion, but the point is deposit growth should be seen positively. If people are fearful of election,
the uncertainty
of election, they will rather come to the bank, take money and say, let's keep under our bed. If something happens, we fly or we run away. We should rather be seeing a negative impact on deposit growth. If people are that apprehensive of what the environment is potentially going to be. So the fact that is growing means that we have a good view of where the country is trending. The fact that deposit is growing, it means that the market participants have confidence in where the industry is going, and also they have confidence in whatever the outcome of the election is going to be. Otherwise, in fact, I cannot even fathom how that analysis can support the growth, that people are fearful and therefore deposit is growing. If they are fearful, they come for money. They come for money to keep themselves because they don't trust that they will have access when they need it. So I think it's a positive development that we should really drum home, so that if there's anybody out there who has money under their bed, they quickly bring it out and into the banking system, because we are operating as normal.
Has the fears abated as in reduced? I remember the last meeting, the governor cited the election uncertainty as one of the reasons that is contributing to the pressure on the Ghana state in terms of the FX development and all those things. And it appears that it is still a challenge right now. How are the banks handling it, about people thinking that the elections are coming, they are not clear about the outlook, some are heavily going in for FX and all. And the governor said it in their report about the election-related pressures being a factor on the cedi depreciation.
I'll prefer that perhaps you throw this question to the governor. We have not done any kind of research to suggest that election pressures is fueling currency depreciation.
What is fueling?
But if anything, election pressures should heighten as we go closer to the elections. Currency depreciation from first half of the year, was 24%. As we speak, from the date, from first half to the time of the last MPC, currency had depreciated only 7%. So how does that support the fact that election that is causing currency depreciation? Because in the first half, when the tension was not as high, the currency depreciated 24%. But in second half, we are now 7% as we get closer to the elections. So I do not think so. But, you know, there is a cyclical side to the currency movement. At this time of the year, if you monitor for several years backwards, you find that businesses are stocking for Christmas. And when businesses are stocking for Christmas, there is increased pressure on dollar for import. Because I mean, now you don't wait for Christmas to stare you in the face before you make your orders. We are in October. Your order should either be on the high seas or they should be, you know, at the port, you know, for importation. So how do you get it? It's by making confirmation on your imports. And how do you get your imports? It's by buying currency to pay for your for the import. So I see it more as cyclical than election related, because we do not have any kind of data or research to point to any other direction apart from observable evidence of what we have seen.
Holding the demand for FX to finance imports for the last quarter or for December or the festive season constant, what are your members telling you about what is happening? I mean, for the past previous 2 weeks, we saw the city being very, very stable and very flat. The rates were not moving that much. Just the past few days, we've seen some spike and all the rest. From your end, and again, scientifically as well, what are the issues underlying drivers of the sudden pressure again on the Ghana city?
As I said, I don't have the data to support any kind of pronouncement. But we should know the factors that can cause a currency to depreciate. Apart from those that are internal, we should know that we can also benefit from the movement on the value of the dollar as well. Yeah. You know, in recent past, the dollar has not been doing very well.
Maybe it's recovering now.
Of course, it will transmit to how the dollar
so that could be the reason as well.
Potentially, also will feed into it, because if the dollar strengthens, no matter what you do, you struggle against it. Yeah. You understand? But if it is weakening or is not as strong as it used to be, then obviously your interaction with the dollar will show some positive signs or some sense of stability. So let us not only always put it on the side of maybe imported inflation or whatever that we are doing locally. It also has a lot to do with what is happening on the dollar front. Note that as a result of the disinflation within the Western world, the regulatory stance, you know, has been lessened, like more or less they are losing down, reducing the rate. What happens when these Western worlds, you know, go down on their rates?
Gold.
People move. Assets move from dollar either to gold or to emerging markets. So when it comes to emerging markets, you have a lot more dollar flows. It may also have impact on how your currency behaves against these international currencies. So there are multi-factors, and it is not one size fit all. Apart from the cyclical nature of our currency movement, there is a certain element which is also driven from this kind of happenings on the international currency market. And again, most of the negative depreciation of the currency that we have seen in history in Ghana, whenever the currency has depreciated aggressively, you can almost on back of an envelope say that speculation is about a greater percentage of it. You know, we are very quick to move when we see a little blip within the currency movement, and then we begin speculating, and then we become fulfillers of our own prophecies. The currency will depreciate, then we go and buy more dollar, and then puts more pressure on the currency, and then to depreciate further. Once there's semblance of stability, the speculation element wanes off. They begin selling into the market, and then we have some form of good, you know, good movement for some time. But obviously, we are in times that historically the currency has suffered. In the last, towards the end of the third quarter, beginning of the fourth quarter, the currency has always behaved, you know, in a very not that great because of the imports for Christmas.
Someone say we have very strong reserves. How is that also not impacting on the confidence bit and the outlook as
I think the question should be, what would have happened if you did not have that strong reserves? You know, the central bank's ability to intervene, you cannot also discount that.
Are they intervening? Are they meeting
yeah,
your
of course. I mean,
still the banks will always want more when it comes to FX, and that is not that.
I know that for essential products, yes, of course, the central bank is doing a lot. I know for oil, for instance, the auction is happening as planned. every 2 weeks, there's an auction where the BDCs that have brought in products are more or less giving forex at very attractive rates that enables them to service their obligations with their trading partners.
Let's look at some regulatory interventions. Now, I know that I engaged some members of yours who had very strong concerns about the cash reserve ratio and the implications that it had on your operations. If you engage the MPC, they also say that, well, it has gotten the result. Do these concerns still stand, or as we speak right now, the engagement is still going on to see whether the regulator can take a second look at this cash reserve ratio? Because for some of the banks, it's still hitting them badly.
Yeah. The governor said it's a continuous review as they assess that the inflationary pressures are at levels that are tolerable. They may take a second look at the cash reserve requirement as it is now. Is it hurting the industry? Yes, significantly. So we are just hopeful that we move in the direction where it becomes not an avenue for fighting inflation, and that the stance on the cash reserve will come within manageable limits.
You use the expression about significantly. I get posturing that, okay, yes, but we are waiting. I don't see the push from the banks then to let the regulator take a second look. When it comes to even the banks that are heavily exposed to FX, it's become a battle between them and their customers. They try to introduce a charge behind the scenes moral suasion to force them to take away the charge. Some of the banks are bleeding, yes, and the pressure this year is having on them with respect to their large exposure on FX.
That fight, I don't know whether you want me to shout.
Yeah, because I get from you that, okay, George, you know, we are waiting for inflation to...
No.
You are not pushing that because it has caused a fight between some customers and the commercial bank. It's serious arguments in the banking hall.
What I'm saying is, it has been a lingering issue for several months now. We've written several letters, we've had several meetings. But if we are a regulated industry and the regulator has introduced a regulation, all we can do is advocate for why we think it should move in a different direction. We have done that many times. There is a policy stance that says we keep it where it is, and that we are reviewing as the environment improves. We will take a second look at it and see where else we can take it to. That is what the regulator has said. We have not sat aloof and said, oh, that is, we raised our hands and therefore the impact is gone. I've just said that banks have been affected negatively, significantly. You understand? Significantly negative.
Ability to lend has been a critical factor?
It is still a significant negative factor within the industry where the cash reserve requirement is. I can tell you that for sure.
Some banks are now seeing whether they should even do away with all their FX and all the rest. That has implications in terms of interest income and all those things.
Of course, banks have various ways of responding to regulatory measures. Those are avenues that we don't touch because we do not tell banks how to run their banks. What we do is when issues that are of industry significance come around, we coalesce and then we speak to the stakeholder, major stakeholder, which is the Bank of Ghana. And that's what we do. What individual banks are doing in order to respond and to meet shareholder expectations, those are environments that we do not go.
Mr. Well, when we come back, we'll look at governance issue, the fraud report, and whether you yourself, you're worried about it, because when it comes out and the signals it sends, we know the work that you've done over the years and even some of these individual banks to deal with the challenge. This is PM Express Business Edition to look at the recovery of the economy and how that is impacting on the banking sector. Engaging the Chief Executive of the Ghana Association of Banks, Mr. John Ewa. We'll be right back after this break. Welcome back to PM Express Business Edition as we look at the economy and the banking sector and how that is impacting on the operations of banks. How they're engaging the Chief Executive of the Ghana Association of Banks, Mr. John Ewa. Governance issues, recent Bank of Ghana fraud report. I am still worried that this is still an issue in the industry and how that impacts on confidence in the sector. Are you worried as well?
Yes, of course. I mean, it's a problem. Whenever this fraud report is released by the bank, central bank,
get a lot of calls.
We get a lot of calls from media, from customers.
I move my money out and
yeah, so it's a matter, it's a concern. But I think the media too is over focused on the banks. You know, this report includes banks, SDIs, and PSPs. You know, payment service providers.
Yeah.
If you look at the total fraud count, 15,800 total fraud count for 2023. Out of that, 969 out of 15,800 occurred in banks. And even with 969, the year before it was 1,163. And it's declined to 969, a positive movement. We look at the fraud count because that tells you the incidence. How often can people just hit you and succeed? And we are, when I listened to the media coverage, it was more or less like hell has broken loose within the banking system and fraud is happening everywhere.
So even if it's
one fraud case,
it's a concern for a lot of people.
One fraud
case can wipe
is
like
one too many.
million or even like 100 million
I am not
from a bank or two banks.
I'm not,
and that is very serious, Mr. Ewa.
I am not in any measure discounting the impact that fraud has on the industry and even on customer confidence. Yeah. The point I'm making is sometimes in our reportage, we should also situate it properly. That of the total fraud count of 15,800, under 1,969 happened within the banking system of 23 main banks. How many PSPs do we have? We have 23 main banks. And this, juxtapose this against the volume of transactions going on within the banks. The banking environment, the number of transactions happening every day. Fraud is a very dicey thing. I mean, sometimes we talk about fraud within the banking system as though the banks have a certain cluster of a subset of the country that we no, one moment. Let me land on this.
Minimize
let me land on this because we need to set our eyes on the bigger picture. Banks are recruiting Ghanaians.
Yeah.
And the fraud incidents you are having when you deal with your mason or your carpenter, when your eye is not there, when you deal with the man on the street, the trotro driver or the mate or the house help, the fraud occurrence that we record as individuals upon all the controls that we have, we should know that the banks are recruiting from this population. So it is the same kind of people, irrespective of the level of scrutiny or the sanction screening that we use, going through police report. I don't know how many companies in this country, whenever they are recruiting, take steps to go to the police, to get police report about. We do all that, but we still get miscreants in our fold.
Maybe you have to up your skill a little bit.
And then we are doing that, and that is why you cannot just rely on that system. Banks are investing in technology that can help us to proactively prevent, not just detect, but prevent the fraud from happening in the first place. And that includes so many things. Investing in systems that helps you, data analytics that helps in prevention. And even, you know, if one or two pass through, your ability to also detect, you know, quickly so that you can stop the bleeding from happening again is enhanced. Another one, awareness of the customer. You know, when fraud happens within the bank, sometimes we over-focus on what the bank did not do. But we forget that the bank is interacting with a customer who has gone to write the PIN number, the PIN of the ATM that the bank has given to him or her in the pouch of the ATM. That because, oh, I cannot memorize my PIN. And they've written it on a piece of paper and put it on the pouch and keeping the ATM card and the PIN together. And this card and the PIN, you can easily leave it in your kitchen. Somebody in your household can have access to it. You can easily leave it on your desk in your office. Somebody within a work colleague can have access to it. And all of a sudden, it becomes a burden for the bank. So what we are doing is also to enhance and strengthen our awareness program on security, because a lot of banking service is moving into the digital financial services environment. So people, as we are moving into digital financial service, we need to be self-aware about the implications of, a little bit of playful negligence, using your date of birth as your PIN, your password, and little checks and balances. Even when somebody's purporting to have been calling you from a bank, your ability to validate. They say trust, but verify.
But Mr. Ward, there are some who would argue and play in the space that if some of these banks have upped their scale a little bit, I know I bank with a bank with some banks as well, and I know one bank particular that is always reviewing the security requirements and everything. Sometimes you complain that you are, but you know that has protected that particular bank. There's another bank that you have somebody call you, I work with this bank, and you realize that there are serious lapses with that bank. Some are saying that the level of investment that we expect from some banks to do in this space, i.e. their cost of operations and their overheads and the charges to me as a customer, they are not up in their game.
Oh, they are. But I mean, you are right. The levels of maturity within the technology, rise, and it's different from bank A to bank C or bank D or whichever bank. I cannot sit here and say that all the banks are at the same level. The level of maturity is different. If you are a multinational bank, perhaps there are some things that your group may force you to do. If you are a regional bank, there are some things that maybe internal policies may, or if you are a local bank, there are some things that your board may ask you to do. So the maturity levels are different. But in all, the banks have heavily invested. They have heavily invested in the system. But we need to move beyond that. We need to begin particularly where staff are involved. To what extent are we as banks able to check staff, even when they are successful in a fraudulent activity? How do we have a system that enables us to check on, let's say, staff lifestyle? I remember many years ago, lifestyle this is audit, over 22 years ago or 23 years ago, I was working with Standard Chartered Bank, I remember at the time, and I bought a car, a Mazda 626. I remember. I got an email from HR. After a few days of using the car, I got an email from HR that said, we have observed that you have purchased a new car. Our records indicate that you have not taken a staff loan. You have not done A, you have not done B. Could you please write to explain the source from which you got the funds to buy this car? And I had to write a letter to HR indicating where I got my money. So this thing did not start now. Banks, this is 22 years ago. Have been doing this. But I believe we need to do a lot more. And when HR of banks attend your wedding, they are not there only for the fun and also as a colleague. They are there to also look at what you are doing. Whether the wedding program is something that befits somebody, the grandiose nature of it is something that from your compensation and maybe your partner, unless you are getting some support from your in-laws or your parents or whatever, they are interested in knowing bits and pieces. It's not like intrusive review of staff, but a little bit of staff lifestyle audit, so that even when people are successful, it becomes difficult to spend. And it means that then why still, if you cannot spend, then potentially that can have a bit of impact on the involvement of staff in fraudulent activity.
Well, how has conditions, I don't want to box down on salary, but how has conditions of service also played there? Because some will see that there's always a push and pull factor here. Are these banks handling these from the lower level to the lower middle level? I mean, staff remuneration also, if it's done well, could it also minimize this a little bit?
I think a lot more. All of us, what we need is a lot more personal financial planning. Salary is something that I don't know whether it's a magic or if they double your salary right now, in 2 years we'll be sitting here and be talking about salary. Because your expenditure will have a way of catching up. It's the discipline in managing that which you have now, which is critical. And that is personal financial management. From what we see, you know, the name banker may put a certain kind of forced pressure on you,
from your friends,
from people,
from your family,
to expend in manners that perhaps
your wife,
your resources will not support. And those are some of the things that as banks or as an industry, we need to spend a lot more time, a lot more work in getting our staff to understand that, you know, you are not living for today alone. You are living for today and tomorrow next. And therefore, you need to plan your resources in a manner that helps you to be able to sustain yourself. Potentially, even when you are out of job, you can be accidentally be out of job. Something may happen and may find you culpable that it may not be willful culpability, but you are culpable and then you may get sacked. You should have something that you can always live on when the unintended happens. So it's a lot more work. As for salary, if you ask the person who earns 1 million, he wants 2 million. If you ask, so it can always be better.
It can't be salary.
It can always be better. Conditions can always improve. But what we are saying is, for what we have, how do we establish some protection mechanism around it and live within what we are capable of affording? If you are earning a certain X, it means potentially maybe your child cannot go to a Y school. So if you are X and your child is at Y, you are putting external strain, financial strain on you, and that may give you some bad ideas. So if you see an opportunity at work, it may even be from a colleague who has hung the jacket somewhere and some few hundred Ghana showing somewhere in the pocket. You may look here and there and take it. So there's a lot more work that we need to do in personal financial planning.
Have you put in place the required structures and measures to significantly reduce these fraud incidents?
We are. Even as soon as this report came, as an association, we did a comprehensive review of it. We did our own view of the report with recommendations which we sent to the banks. But again, you should know that we are not an authority or we are not a regulatory body. What we can do is to highlight the risk, the factors or the opportunities and the like, and our members who adopt as they deem fit. There are boards in place that have the duty of surveillance or supervision of individual banks. So all that we can do is to highlight what we feel banks or we believe banks should do in these kind of instances where the fraud, particularly I get concerned about the staff involvement. But we've had some 2 years of good run where the level of staff involvement came down. But then all of a sudden, you know, we've seen a spike in 2023. And it's something that really worries us.
As you try and round up as well, in terms of corporate governance as well, what is the association doing at that end to ensure that it is strictly the peer mechanism route, to ensure that it's strictly, enforced by your members? There have been incidences in the past where it's been flagged as serious corporate governance breaches and all the rest. What is the association doing about that?
Yeah, the central bank rolled out the corporate governance directives, and banks are strictly complying with the requirements of those directives. There are things that banks hitherto could do just by way of going to the market, maybe looking for a critical staff, but now there are governance structures around how you even recruit senior people, what we call key management personnel, into your fold. So the governance systems within the banking environment has improved significantly, and we can only trust that we will continue on the path that we are now. We do not have any report that suggests that banks are willfully breaking, governance structures in attempt at achieving a certain objective, and therefore we only trust that the corporate governance directives, as we have now, banks fully comply. Because if you will remain in compliance, I think, and Bank of Ghana, to be honest, has also been undertaking some governance reviews. It is something that did not used to happen in the past. And these governance reviews will come out with the level of compliance and where there are deviations, those institutions will be brought back in line.
Whilst you round up, I mean, I knew that during the COVID time, there were a lot of banks that reviewed Saturday banking closing their doors. As we speak right now, when are we going to see a lot more of the banks open their doors to do Saturday banking?
As far as we know, Saturday banking is still ongoing.
As opening the banking halls to the public?
Yes, even before, or even after COVID, just after COVID, we saw Saturday banking in operations. And even before the rollout of this Saturday banking, or at the time when, as you are referring to, they were all over
everyone.
It was not every branch that was open. It was selected.
Not the branch. I'm talking about the banks themselves. So we don't see.
I'm not sure there is any bank that says that used to do Saturday banking that has stopped. I'm not aware. And since you have brought it up, perhaps it's something that we should maybe do some surveillance and understand ourselves.
Is it that it was not working for a lot of these banks?
I cannot say, because
cost component
as far as we know, there has not been any stoppage of Saturday banking. It is coming out from this interview, and we will take a look at the environment, do some surveillance, and understand it for ourselves.
And it will be brought back if it has not been brought back.
Again, these are bank-specific decisions, and if a bank, out of their own operational mechanism, decide that Saturday banking, we've rolled out alternate channels of dealing with the customer on weekends, and therefore we do not find the need for opening branches on Saturdays, and therefore they want to go with that, to the extent that the customer is not negatively impacted, customer can get service. What's the problem?
So I appreciate your time so much, and I know we'll be coming back again to see how the industry is doing, and
most welcome.
The outlook as well when we turn the corner.
Hopefully we talk about only great things when we meet next time.
Well, thank you so much for your time. This has been PM Express Business Edition, engaging the Chief Executive of the Ghana Association of Banks. Look at the development in the industry, how the external environment is impacting on the banking sector, and how this could also lead to the reduction in cost of credit out there. My name is Wiafe. Have a good day.